Everybody, good morning. It's Pete. Welcome to today's episode of Stocks for Breakfast. Today is Monday morning, May 11th, 2020. Grab your coffee. Hope you're doing safe. Awesome weekend over here in Florida. A little bit rainy, but very productive weekend. I guess that's kind of the stuff you get on the weekends when it's raining. Hope you're being safe. Hope everything's going well for you personally. I know a lot of people are having a tough time with getting back to work. But that's the actual positive for the market right now, which is the reopening of 47 out of 50 states, I believe, is what I saw over the weekend. The market's reacting very positively to that. And remember, we're trading the current market conditions. We're not talking about long-term investments. And right now, the big blue line is pointing to the upside. So we have a lot of good opportunity. We've had a lot of good opportunity, specifically last couple of weeks, has mostly been taking advantage of either earnings or specifically technology stocks, which have really followed through well to the upside. We're starting to see some laggard technology stocks that are coming up to breakout levels that are not quite there yet. The interesting thing about the current market conditions is you always want to be prepared. You know, we're always talking about relative strength, relative weakness, not necessarily to trade on the other side, as the market's going higher, but absolutely that if the market should happen to be having a negative day, you want to be short selling, or at least at the very least have a list of stocks you would potentially short sell if the market happens to have a negative day in a bullish uptrend, which can happen. I mean, that obviously it happens when you get these nice moves to the upside and a few days pulling back to the downside. It really doesn't seem recently like we've had that, because every time we've had a move to the downside, it's been caught with fresh buying right to the upside the next day. There's a couple of days recently where we got hit hard in the afternoon. You're like, okay, time to tighten up those stops on the swing trades. And next morning we get some good news and we're bouncing right back to the upside. But here's the point that I want to get across right now in the market in a big way. I am scanning everything right now, and I can't find any really good ideas on the short side. Not that I'm looking for it, but my point is, I get a lot of questions about intraday when the market's pulling back intraday in the midst of this, let's call it a 7-week rally now, or mid-March, or however many weeks that is. And we'll take a look at that in a second. And the questions relate to profit taking and profit potential on ideas and accepting risk on ideas to whether it's a day trade or a swing trade, it doesn't matter, but I'm going to use day trade as an example here because we can extrapolate out to the weekly and the monthly charts, which we're actually going to do in a second. Is it even worth it to put on a trade that's going down right now when all of the rest of the money in the market is going higher? And the obvious answer is no. It's actually something we've all done. I'll admit it. I've definitely been periods in my life where I'm like, okay, I can't make any money on the long side right now because we're chopping around. It must be a short sale. And then the market catches a bid and takes off in the direction that the rest that's been going for 7 weeks. So I just want to give you guys a little bit of a market wisdom. For like, I don't consider myself anything like that. It's just market wisdom from my own personal trading losses. Trading is infinitely easier to get profitable in the long run. I'm not talking about from one day to the next. I'm not even talking about one trade where you happen to catch the top or you nailed a strong stock that sold off for. Okay, that's not ever what you're looking to do. You want to take advantage of opportunities in the long run that have the highest probability of making you the most money, and that only happens in the direction of the higher time frame. And I'll give you a really big proof point, for lack of a better way of putting it. I traded with this guy, Mark, a few years ago, 7-figure earner consistently, year after year after year. And I remember asking him one time, and he was a perma bull. All he did was like, I'm looking for stocks to buy. And I would ask him one day, two really important questions. Number one was, what do you do on days that your stocks are going down? And he said, I'm looking for a spot to buy. Way out there, right? But really it's not, because if you don't have conviction in your ideas, if you don't have conviction in your bias, if you don't have a conviction in where you believe stocks are going, you're going to be hesitating on both your entries and your exits. You're going to miss good entries and you're going to book your profits too soon because you didn't have conviction in your idea, which actually brings me to the next part of making money, because obviously that's why we're working on this stuff together, right? For making money. I had asked him, I said, you seem to always press your winners. You seem to always never get shaken out of a good trade. That's probably the best way to word it. I said, what do you think about when you have a stock that's up $5 and pulls back 4? What's going in your mind? Like most traders normally have this thought process of, oh gosh, I just gave back. Let's say you got 1,000 shares. I just gave back $4,000. And he said, I'm not looking for the $4,000. I'm looking for 20. He said, that's the point. I said, but what are you thinking about when those paper profits come back? He said, I'm not trading for that. He said, that's a part of it. He said, if you give me 10 trades and 6 of them break even, but 4 of them follow through, that's all I care about, because those 4 will make me 50,000. He said, the other ones, that's just, it didn't work. It didn't follow through. My plan is to squeeze as much as I can out of the winners, not chop back and forth. But the only way you can do that is to have conviction in the long-term ideas and ultimately hold those winners and not focus on paper profits that you gave back. Now, there's different strategies. Some people like to be in and out of the market, but here's what Mark said to me about that. He said, if you are taking quick, fast profits, you're most likely taking break-even trades compared to your risk. Now, he's not saying that you necessarily need to only take trades where you have an X risk reward, because X risk reward still implies that it's moving in your favor. That's a whole other story. The risk reward numbers are not relevant if you don't have an edge in the first place, because the odds of getting the reward are more important than the fact that you just picked a number out of the air. So 3 to 1. So anyway, the point that he was making was there's nothing wrong with taking quick profits if that's all that's available in the market, which is actually what I want to talk about here in the market in a very brief moment, because we've had a lot of conversations in the coaching program back and forth about when and how to book profits, and specifically, should you hold all day, or should you let's say you have a fast move in your favor in whatever stock you happen to be trading. Should you, oh, hey, my cat's in the background. Should you blindly just book profits when it gets out of a momentum move and starts to pause intraday? And the answer really comes down to the market conditions and the condition of your stock prior to the trade. Every trade is not the same. Now, Mark had a little bit different thought process. Mark was only trading longer term ideas and didn't really care about the minor fluctuations back and forth. But if you're a brand new trader and you're trying to make the distinction about certain trades should be cash flow trades and certain trades should be ones that you build positions in, you need to understand, is the market well bid? How long has it been well bid? Is it closing higher one day, closing lower the next day, closing higher the next day? That's a mess. And those situations are going to dictate you should be booking profits until it gets out of that situation. And what does that mean? Positive from the open, positive from the close, trading above yesterday's high, for example, for long, that has room to go. So every trade is not the same. So I'm just going to briefly go over to the SPY, and we'll just touch on that for 1 second. Let me just pull that up. So there's been some frustrating trading, I guess, for lack of a better way of putting it, where during this week here, during these 3 weeks, really, you can see we had a lot of what we call indecision candles and really very infrequent, consistent moves like this, and especially not moves like this where we're getting large green candlesticks. So you compare that to some of the other indices that actually were breaking out. Where's the Qs? Right here, where we did finally get through some levels, and you can see on the weekly charts, we actually fought our way all the way back. So really the point that I'm making is you need to work top-down analysis and know if you're working off the last quarter, or you're working off the last couple of weeks, or you're working off yesterday. And that will affect how long you decide to hold the trade. So in other words, the more money that is committed to your idea and the consistency of that money in the direction of your idea will allow you to have conviction in how long you should hold the trade. It's not just right now it's going up. because that's not enough information. If it's right now, sure, you could day trade that stock. But what if you want to hold a stock for 2 days, 3 days, 4 days, a month? Where are you getting the argument to hold that trade a little bit longer? So I just want you to have in your mind, there's two different mindsets. You could be like Mark and say, I'm long only, and I'm just looking to squeeze as much as I can out of every winning trade, and I don't care about all the trades that come back. He doesn't care about getting out or quicker profits or anything like that. Or you could take a look and take it a little bit deeper, for lack of a better way of putting it, and go into the day saying, okay, the month is choppy. The last 2 weeks are definitely well bid, and I'm going to trade with conviction to the long side and hold my winners and press them until that changes. And that's really the thought process that you need. So if you go into a day where it's a 1 day trade where something is exploding and following through that day, but the last week and the last month was kind of choppy and doing nothing, you have to realize your conviction level in that stock can still be strong, for lack of a better way of putting it, because of today's price action, but it's not a situation where you would trade size because there's not a lot of institutional or smart money activity prior to that 1 day. However, that should be something you put into your watch list. So you saw that I had a big list of all the major ETFs. That's generally the first way during the market, during the day, during my prep time, where I'll go in there and say, okay, what am I looking for heading into the day? What kind of overall picture do all of these major ETFs give me right now? And I came into it today saying the futures right now, we're rallying with a kind of that break even right now. But from a longer term perspective, all of these charts, literally all of them, except for maybe oil and some commodity stocks, are in bullish weekly trends. Toward the top on the monthly, but clearly on the monthly the last 3 months because we sold off hard. Not quite well bid on the monthly charts yet. So the weeklies are positive. Some of the dailies are positive. And then you drill down into those stocks. So you really need to start to get a feel for the market. And I hate to use the word feel because that's not replicable, but you get a feel by paying attention to more things. And if you're only looking at your stock, you don't have an idea, is overall buying in the market strong, or is it just this stock? The more pieces to that puzzle that are on the same page, that's where the daily, weekly, and especially the monthly consistency to your P&L, and you start to see your account just go higher and higher and higher. The opposite of that, which is super, super important, is when it's a mess, you don't trade, or you pull back significantly on the conviction level in your ideas. You could trade individual stocks that are breaking out of stuff that has earnings or breaking down, but your conviction level should be less and your activity level should be less. So very much like driving, you're going to scale up and scale down your aggressiveness based on the overall conditions of the market, the same that you would on as you get on the highway. So I just wanted to start the week out with some ideas of how you can go into the day with conviction, or if have a lack of conviction, how that's going to affect your activity level. So if you have any questions, absolutely leave a comment, give us a like if you find this video helpful, and absolutely subscribe so you get updates. Have a great day, everybody.